Di Sibio, the global chairman and CEO of EY, is here in India just ahead of the announcement of his successor, which is expected in November. Di Sibio has been the CEO since 2019 and is serving out a 2-year extension, one that he got to oversee the rollout of his audacious, ambitious plan of splitting the firm's consulting and audit businesses. Called Project Everest, this turned out to be a peak that Di Sibio couldn't climb and was eventually forced to call off the plan earlier this year. Hello and welcome to the Global Dialogue. I'm Shereen Bhan, and joining me on the program once again is the Global Chairman and CEO of EY, Carmine Di Sibio. Thanks very much, Carmine, for joining us here in India. Welcome back to India. This is your first visit since the pandemic.
It is, Shereen, it is. It's great to be here. It's great to see the warm weather. It's
warm weather. We're going to get you to exercise a little bit in India.
I love it. I could use the steps, so this is great.
Hopefully we'll get to the 10,000 mark. But let me start by asking you about India and your thoughts about the growth that we're seeing here, as well as the opportunities that you believe foreign investors will be looking at.
So I've said this before to you, but now I believe it even more than the past couple of years. I think India is probably top of the list for global investors in terms of where to invest, in the next few years, or even more than that. And a lot of it has to do with obviously everything India has going for it. Obviously, the most obvious thing is demographics, but it's not only that. It's entrepreneurship. It's frankly, the ability for business to flourish. And, I've said in the past that sometimes, bureaucracy got in the way, but that seems to be going much better. And there's a huge appetite to invest in India from around the world today, including from an EY perspective.
I'll get to the EY bit in just a second, but you talk about this appetite for investors who are looking at India. And we've seen private equity and we've seen a lot of sort of control deals happen here in this space as well. You talked about what's propelling the growth story in India, but what is it that investors are looking for? Are there any sectors in specific that you find more interest in?
Certainly consumer and anything to do with consumer. I met with a few clients today that are franchisees of other brands but have brought it to India. And so consumer for sure, technology obviously. There's great entrepreneurship in India around tech, and I think there will be more and more around AI as well. So that's something that I think India's poised to do more in, and I could tell you a little bit about what we're doing, but it's so consumer tech. I think now. The sector that I think India has a great opportunity in is manufacturing. That's something that obviously India can capitalize in terms of what's happening, in terms of people moving their supply chains away from China. And I think India is a good place for that to happen. And that's something that I think, skilling, and India skilling its people. So, to be more apt in terms of manufacturing will be important. So I think, I would say those are maybe top three. I mean, private equity is always part of it, if you count that as well. So those are three. You
talked about the manufacturing opportunity as well as this reorientation or reglobalization that we're seeing in light of the geopolitical flashpoints. And we now have more to deal with given what's happening with Israel and Palestine. But specifically on China, what's the view? The recovery is slower than expected and anticipated. We don't know how the real estate sector is going to unravel and what that will eventually lead to, whether it will lead to systemic risks in China. But what's the outlook now on China? I think the jury is clear that decoupling is not something that we're going to see happen. We probably will see de-risking, but not decoupling, which was the expectation.
I think that's true. Look, I think all companies today are looking at their China operations, and number one, making sure that data that's produced in China stays in China. That's important. It's important to the Chinese regulators. So we have all our clients looking at, what technology they're using in China, what data they're producing in China, and this is important to both sides. And so that's number one. Number two, all our clients are going down the route of more of What's produced in China is sold in China. What's produced elsewhere is sold elsewhere. So those, I would say, are two rules of thumb. And then, I do think the world wants to see where China is going from a future perspective. I think their economy has slowed, and they're still kind of coming out of the COVID period. And then there's going to be, right now, I would say, there's acceptance to invest in China in certain sectors, certainly not in tech, and certainly not in any kind of sector that could have a geopolitical consequence. But in sectors like consumer, many companies, both American companies and European companies, do want to take advantage of the Chinese consumer. And so when you talk about things like retail and fashion and so forth, that's still a huge investment for companies in China.
Global growth, and the World Bank and the IMF pegging global growth at about a little over 3%. What's the expectation specifically as far as the U.S. is concerned? Because the resilience has surprised many on the upside.
Yeah, it has surprised me on the upside from a U.S. perspective, but I think that's slowing. You're starting to see more cracks in terms of the consumer. There have been two things that have been propelling growth in the U.S., and it's been actually propelling the U.S. economy. One is purely the consumer. And the consumer's been incredibly strong. They've been buying. But now you're starting to see the consumer slow. More in the in the middle income area and the low income area. The high income area is still pretty strong. But you're starting to see some slowing. And then also the other piece is jobs. And jobs, there's still a lot of jobs and job needs in the U.S. But the jobs are two-front. One, they're in the service sector, where there's just not enough people. So people working in restaurants and hotels and so forth, it's just not enough people. So very simply, people are saying, some of the influx of even illegal immigrants that are coming in, just put them to work. Business people are just saying, get them work permits and put them to work. They want to work. So that is a solution to some of the. And then the other end is legal immigration. When it comes to more skilled jobs like tech and so forth, that was incredibly decreased. And so there has to be reskilling, and there has to be legal immigration for skilled workers in things like tech. That has to come back.
So what are clients telling you at this point? Are we likely to see a big slowdown as far as spends are concerned, investments, expansion plans, given the fact that you now start to see a softness coming in as far as consumer spending is concerned? How are companies reacting to this?
So, Shereen, I will tell you, so in the U.S. in particular, I think, 2 or 3 months ago, I think people felt that, the Fed was doing a good job, that eventually they'll get to stabilizing and then cutting rates. And so people thought, okay, we might have a slowdown. It'll be a couple quarters, and then we will move on. Now there's more of a negativeness going on. There's more of a feeling of this is going to take a little longer. There's really a negative around most of calendar year 24. So I think really people want to see, companies want to see some real confidence in rates going down. And so far, it doesn't look like
we're going to see rates going down anytime soon. The hope is that we won't see another rate hike.
But even if there are no more rate hikes for a couple of quarters, and I think the central banks, and this is true almost globally, not just in the U.S., give a sense that rates will start coming down, even in the third quarter of 24 or something further out there. I think that'll start giving some confidence in terms of what's going to happen. Because right now, without the confidence that rates are stabilizing and or going down, people are very hesitant to really do much in terms of transactions and things like that. So I think there has to be that confidence built in for the economy to really start taking off.
We've gotten used to dealing with different kinds of risks, especially through the course of the pandemic, whether it's rates or inflation, and geopolitics, which really is emerging as perhaps the big risk. I mean, that's what Jamie Dimon said when he spoke to me a couple of weeks ago here in India. How are you reading that, and how are CEOs now starting to factor that into plans? It's no longer just China or Russia, Ukraine. You now have the Middle East to factor in.
That's a good question, and it is by now we always talk about what are the top 3 things CEOs are worried about. Geopolitics now is at the top of the list, and I think people are looking at their supply chains. They're looking at who they're dealing with. The whole friend-shoring concept is out there, and they want to make sure that wherever they're investing, that they're going to be able to have a government that's friendly with their home government, and I think that's important, and that's something that, the West right now, Europe, the U.S. is pretty aligned. Certain countries in the Middle East are aligned. I think India is aligned. And then I think others are not in that fold. So it's a worry. What's going on in terms of Israel and Palestine is just really incredibly sad. Incredibly sad in terms of what's happened. This is something that is not good for anyone.
No, and unexpected.
Totally unexpected. And it's something that, no one wants to take sides on things, but when one side does something unexpected and that horrible, it's hard not to take sides.
Let's talk about EY and your confidence in India and the growth of the business here, given the opportunities that you see. I mean, you've got your largest employee base outside of the U.S. here in India.
It's getting,
and growing.
So we have about 100,000 people now in India, and that includes our Indian operation as well as our shared service operations. And we're in all the major cities in India. We've been hiring. We hired 35,000 people in our fiscal year 23. We're continuing that hiring rate. It's got our largest growth rate of all our different regions around the world. And so we are incredibly bullish. We're bullish on our leadership team. We're bullish on all our people here, and we will continue to invest heavily in India. I don't have a lot of negative things to say. It's all incredibly positive, and I'm not just saying that because I'm here.
Yeah.
And in fact, I'm here because of the fact that we're very confident in terms of what we're going to do, and we have big plans in terms of doing much more around managed services, doing much more around AI in India, investing a lot more in terms of our people, doing a lot more use cases with our clients in India around AI. So it's a major focus for us.
So what is the investment strategy or the investment plan going to be if you believe that India is going to be one of the pillars as you roll out this AI digital plan of yours?
So we look at AI in 3 different what I call buckets. One is how do we help our clients with AI? How do we help them implement AI in their businesses and what they do? And this is where we talk about use cases. We have several hundred use cases going on globally, some in India right now. We want to do a lot more in India with our clients, and we're looking at these more by sector, Shereen. So we want to make sure that we're doing use cases that are beneficial to almost the entire sector, because that's how we get scale. And this, to give you an example, we're looking for in the financial sector. We have a use case around financial advisors. So a financial advisor, typically that deals with high net worth individuals, has a team of 15 to 20 people. They do a lot of research. They prepare everything. Well, with AI and generative AI going forward, that 15 to 20 people could be more like 5 people, because so much of it will be done by AI. That's just one use case in one particular. It's in one company right now that will be a sector. And so we're looking to do a lot more. So that's all in bucket 1. In bucket 2 is how do we improve our own business using AI? So how do we improve how we deliver an audit, how we deliver our tax services? And that's something where we are going to utilize India and our skill sets in India more and more as we go forward. That's one of the conversations I've been having with our team here. And that's something where we will improve our business. We'll be able to service our clients better by not only using people. We always believe in people. We believe in humans at the center. But we're going to be able to use AI, generative AI, going forward. We just introduced the whole platform around AI called EY.AI, and as part of that, we introduced EYQ. EYQ is basically a chatbot with large language model across all of EY globally, where all our people could ask it any questions they want in terms of EY, and that is learning every day. We have 400,000 people globally. 100,000 people signed up to this in the first 2 days.
No.
So it's incredible. It's incredible what we can do. That's the second bucket. And the third is, how do we really make sure that the world is using AI for the good and not the bad? So I'm encouraging all our partners around the world, all our leaders, to get involved in local, in country, government partnerships with, private-public partnerships around AI to make sure that AI is used for the good, that it's not biased in any way. And we are getting involved in a lot of these around the world. So that's how we look at it on a more macro basis.
And I want to pick your brains a little bit on this involvement that you were talking about, because I think everyone's trying to figure it out. We just saw tech CEOs meeting with leaders from Congress in the U.S. to try and decide what the future roadmap should look like in terms of regulation. What's your own perspective, and what kind of public-private partnership or private-privite partnership do you believe we need to forge?
So I think most countries, this is my own view, including the U.S., should formulate a commission, a commission around AI. And the commission should involve people from the government, people from the private sector, probably some academics, to really research and really analyze what needs to happen going forward. I don't think anyone should rush to regulation or rush to non-regulation, because it is difficult. It's difficult to understand. But at least forming a commission. So the prime ministers, or in the case of the U.S., I think President Biden should form a commission. And it should not just be the tech people on the commission. It's certainly not. In fact, I'm not even sure large tech should be on the commission. Maybe some. But I think that's a way to get public-private working together in each country. So I would say in India, something similar can be put together as well. And the risk right now that I see is European governments are going to rush towards regulation. And I think that's a mistake. I think that's something that will hurt European companies and European people, because if you rush to regulation, you're going to curtail, the creativity around AI. So I think the balancing act right now is to really understand it better and to make sure that government and the private sector understand it together. And it can't just be large tech.
No, I would imagine that it shouldn't just be large tech that's taking a call on regulation. But, I want to link this back to what you said in terms of your own use cases for AI within the company, and how you could potentially look at bringing down the number of people required. So that's the big question. Every time we've seen a tech change happen, a tech disruption happen, it has led to reskilling, redundancies as well. What do you anticipate on the back of what we are seeing today in the next 5 years?
I think it'll be the same thing. It'll be yes, some jobs will go away. I gave you a use case where jobs will go away, but then new jobs will be created, and that will continue. And that's been the case with every development around technology, and that'll be the case here. I do think the reskilling part's important. I really do, and that's something that I think everyone needs to be focused on. But we've done a good job. Every time some new technology comes out, we reskill. The cloud comes out, and people are reskilled. And so this will be the same. This will be the same in my view.
So you don't believe that it's going to be what many say, the end of the job market as we know it, and humans being replaced by AI?
No. Do I think we're all going to be sitting on the couch doing nothing and AI is going to do everything for us? No, I don't believe that. I don't believe that.
That's good to know. But, I now want to talk...
That might be good, but I don't believe it.
Well, if somebody's paying the bills, I don't mind that at all. No, but, I want to talk to you about now, Carmine, is your tenure as Global Chairman and CEO. You took over in 2019.
Yes.
You've seen the firm through a very difficult pandemic period. You've got record profitability. You took the firm from 36 or 37 billion to 50 billion as of June 2023. I know you've described your tenure as humbling and challenging. What's been the biggest challenge for you?
Well, I think you mentioned some of it. The pandemic was certainly a challenge, but we worked our way through it. And then, as you know, we were working on what we call Project Everest.
Yes.
And that's separating the firm.
A treacherous peak that you couldn't climb.
Right, exactly. Well, we did climb. We just didn't make it to the top. So we learned so much from Project Everest. So I'm going to ask Shereen, if you can go back 18 months, would you embark on it again? And my answer is absolutely yes. I would certainly do some things differently.
What would you do differently?
Well, number one, I think right now, I think about now if we were moving forward on Everest, I think the economy is so iffy right now that we probably couldn't move forward anyway. Yeah. So we would be waiting. And so I do think we should have looked at private markets, not just running straight to the public markets. That would have given us some more flexibility. And it would have given us more flexibility even in the current environment that we're in now. So that's one. Two, I think from the beginning, our strategy, in particular our strategy around what we call the short-co or remaining EY, needed to be different and needed to be better than what it was. I think there was too much focus on actually keeping consulting work in that firm as opposed to really being audit-focused. And I do think going forward, I think it'll be much more audit-focused going forward. Those are a couple things, but it's something that was certainly challenging. And it's something, though, that I do believe, and I still believe, from an industry perspective, something like this will happen with the firms. But
there weren't too many within industry that were on your side. I mean, there was, privately a fair degree of skepticism as well as opposition and publicly as well.
So if one of my competitors was doing this and you asked me that question, I would say the same thing. Of course not. I would never be for that. But behind the scenes, I think they were all looking at the same place. And they still are.
But do you think like 5-10 years on, or perhaps sooner, we will see
I'll give you a time frame. I'll give you a time frame of 3 to 5 years.
3 to 5 years.
Yes.
Yeah.
Yeah.
So you think EY would consider going back to Project Everest, whatever it's called, post this?
Probably 3 to 5 years out. Yes.
Yeah.
I do. That's my own personal belief. I won't be here.
Yes. June 2024 is when you retire.
Yes.
But to make it more acceptable, and there was a fair degree of opposition internally as well, to make it more acceptable, to sell the idea, if your predecessor were to take this forward, what is it that you would tell them? What is your single most sort of significant message to them on this, of taking this forward?
Yeah, I would say right now I think it's too soon, so I would take some time. I also think people are changing within the firm as well, so I think that will be helpful. And then, I also think the market itself. I think you have to do this in a market that's strong, and you believe it will be strong even over the next year or so. So I think right now would be the wrong time.
So what's been the big takeaway? How have you changed, and what do you believe has been the big impact that you've made on EY? How's EY changed with you?
No, I think we, I and EY have changed together. When I joined the firm, oh my God, the firm was so much smaller. I joined in 1985. I joined Arthur Young. Arthur Young, I think at the time, was about $1 billion in revenue. So think about it. Now it's $50 billion. And, I was a piece of that throughout the firm. I had a great experience in terms of working on large clients, working on smaller clients. Most of my background, I worked in financial services, but I also started a group in terms of doing something entrepreneurial. I was an audit partner. I was a one-year partner, and I lost my biggest audit client. And so I was given the ability to formulate a consulting group around risk management and regulatory for financial services, and that gave me the ability to build that practice. That practice today is, multi-billion dollars globally. And so that's something that I have tremendous satisfaction over, and something that the firm allowed me to do within the firm. So, things like that are just great in terms of growing and helping EY grow. So I think I made a lot of impact from that perspective. And then the other part is I think I made a lot of impact in terms of mentoring people and young partners today that maybe aren't as young as they used to be, but it's been great. It's been a great ride.
So if I were to ask you, to young kids who are considering a consulting job or a job in audit, what's the most underrated thing about it, and what's the most overrated thing about it?
Well, I will tell you, young people today, if I had one piece of advice to them, is be patient. Certainly you want to do well in your career, but I had many opportunities to leave for short-term gains, and looking at it now, it would have been a mistake, most of them. Now, you never know what would have happened, but young people today are a bit anxious, and look, I tell them all the time, be bold and so forth, but in terms of being at EY, have some patience. You will gain a lot of experience, you'll continue to learn, and it's a great career.
So what's the message to Rajiv Memani and team here in India?
No, Rajiv is, honestly, I would make fun of him, I usually do, but he is one of our best leaders globally. He's a tremendous leader. As you know, he's a client-centric person that's always thinking about two things, our clients and our people. And I love that in a leader.
Carmine, it's always a pleasure. We wish you the very best of luck. It's great to have you back here in India.
To be here.
Thanks very much for joining us on the Global Dialogue. I don't know if you've done the 10,000 steps yet.
No, we're
getting there. We're getting there. That's it on this edition of Global Dialogue from all of us here on the team. Goodbye. Thanks very much for watching.